This is David MacDonald from CCPA in Ottawa, and he has written or helped write the 17th alternative budget for the Canadian budget for 2012. So, David, thank you for giving us some time.
Thanks for having me.
All right. David, fiscal austerity budget, that's called the fiscal austerity, with the intention of perhaps creating more jobs and helping business and consumer confidence. How prudent is that fiscal budget that the government of Canada is presenting?
Right. Well, the budget that was brought down a couple of weeks ago, is not a budget of necessity. It's a budget, not a budget of fiscal necessity in any event. It's a budget of political necessity. And so what that means is that this wasn't the pieces that were implemented were not necessary. The cuts that were made were not necessary. The budget was going to be balanced in any event. And in fact, economic growth over the past years meant that it's going to be the budget will be balanced actually somewhat sooner than we originally thought. So the cutbacks in services that we're going to see in food inspectors, for instance, or EI officers, or people that help elderly Canadians get their benefits, those are going to be cut back. But there's no necessity to these things because the budget was going to be balanced in any event.
Mm-hmm. What is the fair taxation that you would expect as you propose in your alternative federal budget? What does that mean, the fair progressive taxation?
Yeah, I mean, the alternative federal budget has a very different view of what the role the federal government should be. The federal government as it stands right now, I think sees the federal government as a very small entity involved in more crime and punishment, as well as more defense spending, but very little spending of any other kind. And so I think the real challenge going forward is that if we do move down that path even further, we find that the government is not participating in programs that Canadians need. It's not addressing the big challenges like income inequality, like youth unemployment, and so on. And so when it comes to balancing the books, I mean, we can do all these things and balance the books. And as you say, it's a matter of where the money is going to come from. To balance the books for the Tories, the money is going to come from additionally cutting back services. So Canadians have fewer services, and they'll end up with a surplus in the future. But the alternative federal budget on the other side takes a look at actual taxation measures that could go a long way to balancing the books somewhat faster, but I think more importantly could go to a long way to funding new programs that would be very useful. These come in the form of increasing the corporate tax rate, closing tax loopholes for wealthy Canadians, as well as introducing a new tax bracket at the top end for personal incomes.
But businesses will say that's the wrong way, because businesses need this relaxation on taxes because that's how they're going to be able to create more employment.
Yeah, I mean, the real challenge around the falling corporate tax rate, I mean, most people don't know this, but the corporate tax rate in Canada has actually been halved in the past decade. So it was 29% in 2000, and it's 15% today. So it's actually been cut in half. We're about 10% lower than the U.S., 10 percentage points lower than the U.S., so significantly lower than American rates. And so I think this single-minded focus on taxation is the only means that we can use to encourage businesses to spend and to create jobs, I think is very wrong-headed. And in fact, if you take a look at the last 10 years of falling corporate tax rates, where you would have expected if this was the primary means of driving job creation and capital investment for businesses, you'd expect to see businesses spending more on capital, machinery and equipment, and spending more on R&D to drive productivity down the line while we were seeing these falling tax rates. And in fact, we've seen the exact opposite.
You were saying that austerity is not really the answer to improving the economic situation of any country, and I've heard that in Europe they're doing the same thing. They're very heavy on austerity, and it's not working either.
Yeah, and I mean the challenge in the Canadian situation is that we don't need austerity. There's no necessity for an austerity. The books are going to move towards balance in any event. And if we see slightly stronger economic growth, they'll move even faster. The key determinant here is not how much we cut back services for poor Canadians or unemployed Canadians. The key is how much we can drive economic growth. And so right now, the federal government is not particularly interested in driving growth or in pulling down the unemployment rate. And in fact, the cuts to services that they're proposing will likely increase the unemployment rate at the national level, which is very unfortunate and really the wrong move to make, during this fragile recovery.
So you're saying that the theory that businesses saving money will hire more people and therefore increase employment, you're saying is the other way around.
Yeah, I mean, one of the big issues is that over the past decade, despite the fact that corporate tax rates have been cut in half, businesses are in fact spending less on capital and machinery and spending less on R&D, which is what they should be doing if their tax rate's going down, if that was the only thing driving their decisions. Now, of course, the issue is that that's not the only thing driving their decisions. And if you look at what's important for businesses, it's not corporate tax rates. What's important for businesses is what's the real interest rate, what's the price of oil, what's the exchange rate with the U.S., and what kind of access do they have to infrastructure and healthcare programs so they don't have to pay out of their pocket for those things. So while one might imagine that corporate tax rates have some impact on business decisions, when we actually look, the impact is negligible and is completely overwhelmed by much bigger factors. And one of the other big factors is how much the economy is growing. So if the economy is growing well, businesses do well. If the economy is growing badly, businesses do badly. And that effect completely wipes out any impact of corporate tax rates. And so I think the challenge for us today is we've single-mindedly focused on corporate tax rates as the only way that we can influence business decisions. But what we're realizing is that changing corporate tax rates actually has very little impact on business decisions. And we need to change how we're thinking about that. And so I think in the circumstances, we could well afford to increase corporate tax rates to match the Americans, for instance, at about 35% for federal. And that would provide us with a lot more revenue at the federal level to fund new programs like a national pharmacare program or a $10 a day child care program, which are things that likely would drive business profits as opposed to a falling corporate tax rate.
What is the problem with the healthcare system? We are eroding our system here, trying to match with the private healthcare of the United States. And what is your answer to the present government that says, well, we can't afford to, because the healthcare budget is going way out of hand, is increasing disproportionately with any other budget?
Yeah, I mean, healthcare costs are going to go up. They are going to go up because we have an aging population. There's no getting around that particularly. I think one of the challenges is that if you are cutting your tax base, if you're cutting your corporate tax rates, as has been the case in BC, and then you say, oh, all of a sudden we don't have any money, surprise, surprise, healthcare is unsustainable. Well, the issue isn't that healthcare is unsustainable. The issue is that you're cutting your tax base by chopping off your revenue from corporate income tax rates. And you're not taking in more, particularly because of the growing gap where 1% of Canadians are gaining more and more of the national income. And so there are certainly things that you can do to have a more progressive tax system so that you can pay for these types of programs.
Mm-hmm. And also optimize the healthcare service itself too. One
of the things I think that the federal government can do, because it doesn't have responsibility for healthcare, only the provinces do. But the federal government can really play a coordinating role in trying to address key issues facing the healthcare system. Mm-hmm. And so with the Martin Healthcare Accords, there were a variety of factors that they tried to address, one of them which was wait times, and it's been relatively successful actually in lowering wait times for key procedures. I think one of the new frontiers that we really should be spending more money on is primary health care, making sure that Canadians have a doctor or an NP, that they can get regular access to healthcare as opposed to going to the emergency room, which is far more expensive. And so I think that the federal government can play a role in advocating for, with money, for new ways of doing healthcare that in the long run will push down costs.
Defense Department, you mentioned in the budget that it's gone about $12 billion higher since the budget of 2001. All that money could also go into social services in the state.
Yeah, there's certainly been a big increase in D&D expenditures. But there's always a lot of focus on D&D, and I think justifiably that there's it has been a big spender. It's one of the few departments that's well above the average in terms of increases since 2006. So when you hear government spending has increased 2006, one of the big reasons is because D&D spending has increased since 2006. But I think the other piece of this puzzle is it's not only D&D, it's not only defense, but it's also this growing national security establishment, which brings in corrections and public safety and the Department of Justice and the spy agency, as well as border safety and border security. And this whole apparatus that has grown up since 2001, since 9/11, has a much higher growth rate. These departments have a much higher growth rate than any of the other departments, say HRSDC providing support for EI recipients. And so I think there's definitely room to stop this growth, to stop the growth of D&D and these other, national security establishment departments, and start to bring those levels back down and use that money elsewhere on national programs.
Also, you talk in the budget about the old age security being dismantled, and some tax shift for savings from 5,000 to 10,000. How does it affect the general revenue for the government when the government is giving more breaks to those who already can save?
I mean, the OAS change is interesting because it wasn't necessary. So, the government's own figures and the parliamentary budget officer that works for the government that does these types of projections, they've all said that the program is sustainable. So there's no problem that we can't pay for it. The tax base will increase to cover this, and so it's not an unsustainable program. It's actually a very sustainable program as we go forward. What's interesting is this wasn't necessary. It's not about fiscal issues, but I think what it is about is it's about the Conservative government being less interested in government as a way of solving problems, and instead pushing those problems onto individuals in the hopes that they'll be able to solve them on their own. And so the challenge for OAS, for instance, by pushing the date back at which you can gain OAS from 65 to 67. Will likely drive up the number of seniors in those 2 years that live in poverty, likely more than double it from about 50,000 today to about 120,000. So you're increasing the number of people that are living in poverty.
So you're saying that the problem of the deficit is in 1,000 cuts. It's not just one singular piece like defense or old age or unemployment, but it's all of them combined with the tax cuts. Talking of unemployment, you mentioned only 39% of unemployed people, some 860,000 unemployed people in Canada, only 39% are eligible, and the other ones don't have any benefits. That's a recent, maybe in the past 2 or 3 years, change. Is it getting worse now?
The major change, just to give a historical comparison, as you're saying, around 40% of unemployed people can access the EI system today. In 1995, that ratio was 80%. So it's just a dramatic change in how many people can access the EI system. And so this recession, compared to the last one, which happened in the early 1990s, significantly more Canadians in the early 1990s could access the EI system compared to today. And so while there are some minor changes in this budget, which I think, in some respects are positive in terms of allowing EI recipients to work a little bit as well as continuing to receive EI, I think those are positive changes. But the fact remains that there is no dramatic move towards increasing the number of people that can access EI in the first place. And so that's the real problem. We're leaving somewhere in the neighborhood of 1.5 million Canadians either unemployed or underemployed, with the tools that used to be there are not accessible to them this time around. And so it makes the recession hit those households much harder.
There is the idea around of a basic income, which would abolish unemployment insurance and welfare and old age pension and child care, and combine them all in one universal basic income for all people that don't reach certain income bracket. Is the CCPA and the alternative budget suggesting something like that?
Well, one of the challenges with a program like that, although I think it's a great idea, is that it really combines both federal and provincial programs, because a lot of the programs, some of the EI, for instance, is a federal program, but programs like social assistance, and other programs linked to other social assistance types programs are available through the provincial level, and so it would really require a melding of those two levels. But I think that you're right. I mean, it has the possibility of really erasing a lot of additional costs trying to manage people's lives through the social assistance programs at the provincial level, and trying to figure out who's eligible and who's not becomes a lot easier. Unfortunately, particularly with the move on OAS, which is like that for seniors. It's quite similar for seniors. It's at a lower rate, but it is fairly universal for seniors up to, even to pretty wealthy Canadians. They can still benefit from this program. A program like that is being cut back, despite the fact that it's fiscally sustainable. And so I think if that's any indication, the current government is not interested at all in providing a new program that would make these types of supports for low-income households more accessible.
You talk about the government proposing some cuts in the Canada Parks budget, environment budget cuts of $20 million, and the Canada Parks of $6 million. How would that affect also the well-being of the population?
Yeah, so this budget is not a budget for all Canadians. It's a budget of cuts. It's a budget of political necessity, perhaps, for the Tories, certainly not one of fiscal necessity. And so what Canadians are going to see from this budget is not new programs or improvements on existing programs. It's purely cuts to existing programs. And so a lot of the details of which programs, we're getting more detail, and I think that's a positive thing. But how they're actually going to pan out, I think has really, has yet to really be, revealed, if you will, to the Canadian population. And so it's only over the next couple of years that we'll start to get a bit more detail on exactly which services are being cut back and by how much.
And what the consequences are for the general population. We will find out.
I mean, I think the consequences are going to be longer lines for government services, poorer service generally from government departments, services that you needed, that you thought you needed, simply won't be open to you anymore. So, despite the fact that youth unemployment's at 14%, twice the national rate, the government's closing youth employment centers where students can go to look for jobs in the summertime. And the government is saying, well, you can use this government website, but the government website's been down for weeks. And so this type of inconsistent delivery of service, this type of poor delivery of service, is likely what we'll see over the coming years.
Is that an ideological and political ideology rather than a fiscal control?
Coming into the next election in 2015 or 2016, they need to have a surplus on hand so they can promise new programs. And those new programs will likely be tax cuts to wealthy households through income splitting, and other similar type programs, tax cutting type programs as opposed to new services. And it's likely that the cutbacks today are not due to any need to balance the budget more quickly, but they're due to a need to create a surplus by the next election so that we can provide tax cutting to wealthy households.
Jack Bedell proposed universal tax, transaction tax. Have CCPA done any research on similar to flat tax, but would be applicable to all monies, not just without any exceptions, monies that go out of the country and come back, and so apparently the wealthier you are, the more you end up paying, because if you're moving millions of dollars to buy shares and trade in the market and all, you would be always paying the same tax as when I buy a gallon of milk. So this fellow was saying that if we had that kind of transaction tax, Jack Bedell is saying we wouldn't need any income tax.
The alternative federal budget has a transaction tax, which sounds like it's somewhat what you're describing. Initially, what it would be is a very, very small tax on well, various types of financial transactions. The example, for instance, is if you buy a share in a company, for instance, you pay an extra 0.01% or something like that, a very, very small proportion that regular Canadians would never see. I mean, it's so small as it is to be insignificant. But if you're a major company and you're trading, the same stock thousands of times a day or thousands of times, an hour, which is what we're seeing on some of the big exchanges now, then you start paying significant amounts. And the goal of the tax isn't so much to raise money, although it would do that to some degree. Part of the goal of the tax is to slow down the financial system.
Mm-hmm. He was proposing 1/4%, and his argument that was exactly what you're saying, that would slow down this volatile market on shares, selling and buying, and would bring quite a bit of money. So you're saying that CCPA has suggested something like that, and this latest budget?
Yeah, in the Alternative Federal Budget 2012, our latest version that came out last month, one of the revenue-generating measures we propose is exactly that: is a financial transactions tax that would put a small percentage tax on all transactions of financial instruments. And it would certainly raise some money, but the primary goal isn't necessarily to raise some money. It's more so to slow down the financial system.
But it would do both at the same time. It would bring more revenues. It's very similar to the Tobin tax. It's just that it's not considered only international, but also mixing it with the local economy.
Yeah, absolutely.
Yeah. Have you heard Paul Hillier speaking about Bank of Canada not fulfilling its mandate to lend the monies that governments of all levels should be borrowing from the Bank of Canada instead of from the private markets?
One of the big challenges in Canada, of course, is that households are at historically high levels of leverage. So the current figures are, debt to disposable income is over 150% now for households. They are the ones that have been driving economic growth for the past since about 1995 or so. We've seen a huge increase in this debt ratio. And so they are dangerously over-leveraged. And I think we could genuinely argue, and certainly, the Bank of Canada Governor Mark Carney and the big banks have also argued that households are dangerously over-leveraged now, and that we need to work towards pulling that leverage down.
Besides that comparison between home savings and business savings investment, the idea that Paul Hillier is talking about is that the Bank of Canada should be lending the money to the deficits of or to any projects that all levels of government should be doing. We have about 10 or 15% right now of the debt of the Canada debt on the Bank of Canada. I think during the Second World War, it was more like 80% or so with the Bank of Canada. So that ratio has shifted. Would it be beneficial for the economy or for taxpayers to shift that instead of having money borrowed by the private financiers?
Yeah, I mean, there are certainly ways of reducing the interest rate that the government of Canada pays. One of which would be moving swapping.
Yeah, which is what, about 30 billion for the federal government, and provincial and municipals another 30, which is about $60 billion a year. That's quite a bit of money, isn't it? And if the Bank of Canada could produce that money at a very cost price, would be quite a savings. Sorry, I cut you.
Yeah, I mean, the rate that governments pay today are at historic lows, and so there's definitely an argument for governments using those historically low rates, whether they come from the Bank of Canada or the private sector. I mean, Government of Canada bonds and provincial bonds, are paying historically low yields, which means that it's a great time for governments to use bonds as a means of investing in infrastructure, for instance, or investing in building new social programs.
Yeah, David, what Paul Hillier is suggesting actually is that. Not that the government, the Bank of Canada, borrows money from the private banks by creating bonds, but rather that the Bank of Canada creates that money the same way that the private banks create the money. So it's not selling bonds to the banks, but rather creating that money, doing exactly what the private banks are doing.
Yeah, and in that sense, the Bank of Canada, which is owned by the federal government, would pay the interest basically back to the federal government, and the federal government could borrow debt free, could borrow interest free rather. I think is the argument you're trying to make. Yeah, I mean, at this point, bond yields for Bank of Canada debt right now are at historic lows anyway, and so whether you were to do that or to do it through the private sector wouldn't really make that much difference. Yeah, I mean, we certainly could have a system where the Bank of Canada loaned the money directly to the federal government instead of writing bonds to the private sector, and that would obviously reduce the cost of borrowing to zero. Although it would drive inflation if we were near optimal GDP growth, which we're not.
Just maybe just some final comment on what the problem is between what this austerity budget of the federal government and why is it run? And you're saying basically that is the experience of past austerity budgets that have not created the result that the government claims that is presented.
One of the challenges going forward for Canada is that in an environment of weak economic growth, austerity is certainly not the answer. I mean, driving up the unemployment rate and driving down economic growth by pulling back on government expenditures is certainly not a great idea in a fragile economic environment. This is an austerity budget that does not drive jobs. In fact, it will likely drive up the unemployment rate. It'll certainly cut services, and it'll do it at the wrong possible time. But the main issue here going forward is that we need a federal government that's willing to even entertain the idea of having new debt in the first place. And this one I don't think really is. You need to have a government that says we are willing to tackle the big issues of the day. Income inequality, crumbling infrastructure, a crisis in youth unemployment, and a lost generation of youth. And we're willing to do that through proactive measures like building new infrastructure, driving down youth unemployment, and so on. But you can't do that with no money. You have to do that with money. This is a great time to lend money and to loan money from either the Bank of Canada or from the private sector because interest rates are so low. But you need a federal government that's willing to do that. And unfortunately, if this budget is any indication, this is not that federal government.
Well, thank you very much. Thank you for answering those questions, and we'll probably get together some other time and do some more.
Sounds great.
Okay, thanks,
Okay, talk to you later.
Bye-bye.
Bye.
Bye.